Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. An immediate countering bullish piercing line pattern yesterday after the previous session's bearish closing black Mariposa. This was the second significant day in a row. The earlier one was significant on so many levels. For starters, it was the first close below all of the following at the same time since early October. They were the short medium moving average, currently 95.05, the medium moving average, currently 94.72, and the long moving average, currently 94.38. And more importantly, the move down opened the way for this week, with still today to go, to be on for a weekly key reversal if we close tonight either over 97.46 or under 95.04. Then we'd be on. Right now though, we've moved from a possible weekly key reversal down into a lesser outside week. The start for this move is that yesterday's piercing line pattern closed back up over all the previously mentioned broken supports, closing just over the medium moving average and just under the short medium moving average. As for the question on whether the mid-October today action is a possible bear flag, well, the jury is still out on that one. Now so far today, a lower open on the long moving average, but a continuation higher from yesterday's immediate countering bullish piercing line pattern. Prices reached up and pierced the congestion area 95.85 to 96.19, within which is the important February high at 96.17. However, the market has so far failed to sustain the drive over this today, and we've seen a drop back below this resistance. And still we're in outside weak territory. The question is still open though as to whether the action since early October is a bear flag or not. LME 3-month aluminium. A hanging man pattern yesterday. Yes, I know that is near the bottom of the action and some may see it as a hammer pattern, but to those I point out the previous session's bullish white soldier and how it was also a bullish harami, and thus I would rather call it a hanging man pattern than a hammer pattern. Actually, hanging man patterns are interesting because they are traditionally seen as a bearish reversal. However, the data indicates that some 6 out of 10 times they act as bullish continuation patterns. So it'll be interesting to see if the market follows tradition or the data on this. One thing was certain from yesterday's action: prices continued their aversion to testing down to the 2, maybe 3 dynamic and otherwise supports below. They are the 50% Fibonacci line for 2021 at 25.86, the rising long moving average currently 23.23, which has been partnered for a few months now with the May 2020 to date uptrend currently at 24.94. Meanwhile, overhead we still have the slowly rising medium moving average currently 27.14, and perhaps most importantly of all, the combination of the broken mid-February to early November uptrend, which is also a possible bump and run reversal top trend line currently at 27.13. Now, for a bump and run reversal top pattern, and I know it is still early on, but I feel obliged after recent week's actions to give you some ideas on the downside for this pattern. So initial target X for such a pattern will be in the 23.53 area. There will of course be obstacles on the way down, most notably the previously highlighted rising long moving average. But I can only say what I see here, and that is what I can see here right now. So far today, a slightly lower opening, but an attempted follow-on higher to the past 2 days bullish patterns. Prices punched up over the August 2011 high at 26.66 and reached up towards the congestion from the rising medium moving average and the possible bump and run reversal top trend line. But it all has faltered, such that prices are now back below the August 2011 high, and today's action is looking like a possible bear spike. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.